Welcome back. Getting back to markets, the way forward. Ashi, Anand, the Chief Investment Officer of IME Strategies at Valcreate Investment Managers, is here with us. Now, this IME has a digital disruption PMS where they are focusing on investing in digitally native platform businesses. So amongst their large holdings, you've got Zomato, Policy Bazaar, Paytm, Nykaa, and Info Edge. Ashi, morning, and thank you very much for joining in. Can you talk about what's driving your bullishness, in this entire segment? Because people are still concerned that despite the rundown that we've seen in valuations, it's still a bit too expensive given where, the profitability is or, where they are on the path to profitability.
Rima, thank you so much. Thank you for having me on the channel. Digital platforms, according to us, right, is a space which is really not necessarily well understood by the listed markets. What you effectively have is companies which are growing at a very rapid pace, right, but still aren't profitable or making very low levels of profitability. In order to value these companies, you really need to understand how profitability is going to shape up over the medium to longer term, because most of these companies are still in a very hyper growth phase. So there are very large amounts of the cost structures that are directly linked to actually, they're trying to shape two core elements. One is they're trying to ensure that customer behavior gets deeply entrenched. So this requires very large levels of platform discounts, etc. The second core element is they're trying to ensure they become one of the dominant players in the market. Now, once you achieve these two core goals, and very often you achieve these two core goals by the time you are hitting your IPO, you can really start to focus on monetization. So across digital platforms, you're really starting to see companies focus on monetization quite aggressively. You've seen your Zomato and Swiggy introduce delivery fees. They've now started introducing platform fees as well. This has actually helped a very big swing in terms of their profitability. You've actually seen someone like Zomato achieve PAT break-even in Q4, a good 2 to 3 quarters ahead of the expectations. You're seeing something similar in Paytm. Now, if you look at Paytm, the core costs are actually linked to payment processing costs. This is a user acquisition tool for them. Their monetization happens from the lending business, where you effectively have virtually no payment processing costs. Now, their lending business, which has been launched only 2 years back, in 2 years has achieved a tremendous level of scale. In Q4, they actually lent 12,500 crores in terms of disbursements. This is higher than SBI Cards in Q4, the second largest issuers of cards in the industry. Now, incremental margins on kind of lending for someone like Paytm are incredibly high because you have very low payment processing costs. So what you're effectively seeing across the range of digital platforms, when they were in the unlisted phase before getting into an IPO, before getting listed, they were actually just focusing on getting customers onto the platform and really building kind of traction on the platform. Now, post-IPO, they're starting to focus on monetization, and you're starting to see a shift was profitably a lot faster. Our main goal is over the next 3 to 5 years, as these companies continue to focus on monetization, people are underestimating just how much these companies have in terms of levers to reduce costs and introduce additional kind of fees or charges that can really drive margins up quite significantly. Now, a combination of
Ashi,
yeah, sure.
If I may come in, Ashi, that's a really interesting sort of thesis that you've put out. Let me just dive a little deeper and ask you. So, one is growth in subscribers or the customers that you have, which is fine. That was always there. Path to profitability has become a well-defined sort of need. And a lot of these companies are moving to that. So that seems to be getting taken care of. So if I ask you, when you're going ahead in your stock selection, the factors that are most important to you, how are you ranking them? Is it growth? Is it profitability? Is it something else? Is it potential to generate cash? What would the most important factors be? And therefore, can you just give us an idea about all the holdings that you have? You have Paytm, you even have Nykaa, where people seem to be now challenging the growth narrative because there's a lot of disruption happening in that space. Just some bit more on the holdings that you have. And you also have an older peer like InfoEdge, I mean, which has been sort of the mothership that has been investing in a lot of these new age businesses. So if you could elaborate.
So just to understand, AMI digital disruption, it's a quasi-private equity kind of a strategy. While it's in a PMS structure, the idea is really it's a longer-term buy and hold strategy around the expected winners. What we are very clearly focused on, I think if you're looking at the one core element, is we are trying to understand a right to win. Each of these platforms operate in some specific kind of narrow niche. Within that particular niche, are they likely to emerge as one of the top 1 or 2 dominant players in that particular niche? Is that niche kind of protected from incremental disruption? How strong are the competitive barriers to entry? And therefore, how well protected is your longer term growth and your longer term profitability? A very core element while evaluating this is understanding the benefit of a network. So network effects, when you have a platform, when there are multiple players all having to be on the platform in order for the platform to actually work, right? So if you just take a Zomato or Swiggy, it's a 3-sided network. You need to have restaurants, you need to have delivery partners, and you need to have customers. Replicating this by any new participant, right? So we know about ONDC and ONDC coming in, but it becomes very, very challenging to build the required level of scale on each of these different elements and each of these participants in order to get the network to operate. Now, this is not just digital. Even if you go back historically, traditional businesses, so BSE or NSE as stock markets are strong network businesses, right? You need enough participants to be on both sides. Now, any new player entering such a segment, it becomes very difficult for them to kind of build a presence. And importantly, it requires very aggressive loss funding. According to us, once you have a few dominant players established in a niche, it becomes very difficult for new players to raise capital, right? So, and therefore, so if you're looking at a Zomato, Swiggy, you're looking at a Paytm, we believe all of these have established that particular niche and dominance.
Fair point, Ashi. Thank you very much for joining in. It's just that right now, at least, the stocks are way off their all-time high levels. I think Zomato is at 100 rupees. All-time high levels was closer to 140, 150. And for Nykaa, the all-time high levels, adjusting for all the splits, etc., is closer to 400 rupees. And the stock right now is at 145. We were talking about Zomato and Nykaa. Ashi, thank you once again for joining in. Get into a break. On the other side, we'll get you an exclusive conversation with ITC Chairman and Managing Director. Stay tuned.